you're a contractor, you're doing a job for somebody, but they don't give you any kind of tax forms near the end of the year. If they just say, even if you request it, if they don't do it, what happens to you?
It's interesting because as a business owner, you would be relieved from some of that tax liability if you issue a 1099 to your contractors and your consultants. So I always feel quite puzzled why that doesn't happen in every scenario. There may be reasons why, but if you are receiving income, it is your responsibility as a taxpayer that you report all income that you are receiving. So if you are self-employed, there is a form that you fill on your tax return. It's called the Schedule C. The Schedule C, you would report all revenue, and then you would deduct all of your expenses, as long as the business expenses are deductible.
Okay. Yeah. So I've always wondered about that, just because there might be some times when people, and I've known it through my own experience, and then it's just hearing from others, that you might work for somebody and for some reason or another, they just don't give you the form in the end to fill out or add to your taxes and everything. And then next thing you know, sometimes you might hear, okay, I've been audited. What do you mean you've been audited for? So you always kind of like have to like dot your I's, cross your T's in all those cases. And Marcia, now let's talk about Marcia. She's got a media conglomerate here. So she's the queen of cakes. She's an entertainment guru. Her taxes must be like $1 million a year. I just bet. But if anybody here has any questions for Jessica, please share. GPS, I know you got your book ready.
Oh man, well, I got my story ready. So, January last year, the IRS sends me a reminder letter, because during COVID, like, they didn't send any of that stuff out. So although I had a payment plan going on of $100 a month or whatever it was, I would just keep paying and la. Well, they sent me a notice, and the notice came out, it was like $10,200, $10,400, something like that. To which, I mean, I damn near fell on the floor like, no, wait, this can't be right. But of course, if you go back and add up all those back years, plus penalties and interest, guess what?
Ding, ding.
You have to take every one of them $100 bills and put a match to it. Yeah. So I began this aggressive campaign to knock it down, and I took every year, whatever year it was. If I could pay it off in the whole month, I did it. If I had to split it into two, I did that. That took me maybe about 6 months to get through, maybe 5, and then apparently, this is where another thing where I learned that you have to keep a track of the balance, because what the IRS tells you it is and what it actually is, maybe two different things. So I had an offset of about $1,000, which went to the state of Pennsylvania. And I said, what? So I get on the phone with them. The lady says, yeah, it looks like your balance here goes back to 2016 to the tune of $10,600.
Oh.
Once again, I'm like, I'm about to throw the phone in the floor.
I needed
to. I said, no. Bill, that alcohol bill, damn. If I can write that off for therapy, oh yeah, they're gonna owe me back. But again, I applied the same thing. Once I went through and looked and saw where there wasn't enough being taken out, because even though you may work a bunch of overtime, depending on who your employer is, they may not tax it correctly.
Right.
So whatever number you see is not the one that's supposed to be there. Right. I had to learn that the hard way, but I fixed that this year.
Good.
Because I actually downloaded some tax software and I actually ran the numbers myself.
Okay.
So now I have a better understanding of when somebody says, okay, well, you make $200,000 a year. You say, oh, wow. Well, you ain't seen that tax bill behind $200,000. Okay. And it's one thing if you're self-employed, okay, but if you work for somebody, well then...
Yeah, it's very difficult to deduct expenses when you're a W-2 employee. It's only allowed for federal employees, and most of federal employees are provided everything that they need to perform their duties. So you seldomly do see that type of expense.
Right.
One thing that I think that it's important that the general audience knows is that you should look at your pay stubs. We're in a paperless environment now. People are not being issued pay stubs, every week or bi-weekly, how we were back in the day. This is all in the portal. You forget about it. You never go back and look at your pay stubs. And if you were monitoring your pay stubs, you would notice, hey, I'm not getting any federal tax taken out. Or why is my federal tax so low? One thing that I tell people is start thinking about, how much you're paying in federal tax. I think that a good rule of thumb is to pay 10% of your income in federal tax. So I think that kind of leaves you at a place where you shouldn't owe. So if you're immediately looking at your pay stub and you see the federal taxes withheld are really low, what's the first thing you need to do?
Right.
Contact your payroll office, get a new W-4 form, and fill it out. Now, the forms have changed over the years. In 2020, we got a new form, caused a lot of confusion. A new W-4 form has been issued this year to avoid some of that confusion. I've been seeing it taxpayer after taxpayer where people are underpaying federal tax this year for last year. And I think that has a lot to do with the way these forms are completed. And they do ask really intrusive questions like, are you, the head of your household? And if you're a single mom, you're like, yeah, I'm the head of my household. Sure, check. How many children do you have? Oh, I have 3 kids. Check. How many jobs do you have? Oh, I have 2 jobs. Check, check. So what you're not realizing is that as you're checking all of that, you are taking from your refund and you're applying it in increments throughout the year in your paycheck. So your paycheck's a little bigger, but your tax refund is either going to be very small or non-existent, or you might owe, depending on the situation. Because let's say at the end of the year, you're like, oh, you know what? I have 3 kids, but my one kid spends 60% of the time with dad. So I'm not going to claim the third kid. The third kid is being claimed by the dad. So now you've taken these tax credits, I guess, throughout the year. And then when you file, you don't have the third kid, and then you have to return some of that.